Welcome to the deep dive. We are hitting the market right at a crucial point, 1:00 p.m. Central Time. It's Monday, October 27th, 2025.
Right. Midday check-in.
Exactly. And today, look, we're not just skimming the surface. We're really bypassing, the usual noise.
We're going deep with the AI metrics.
That's in the mission. A surgical synthesis, really. We're looking at the AI-powered data from the top 40 highest volume trades globally, trying to pull out the critical signals for you, the learner.
And the data we're using here, it's incredibly rich. It's proprietary stuff. It goes way beyond just looking at price and volume charts.
Right.
We're talking about deep flow dynamics, advanced modeling, things like implied volatility rank, which is interesting. But, the really critical piece is this AI calculation of true value.
Daily and hourly true value. Okay.
Yeah. It's trying to set an equilibrium price based on historical flow, proprietary risk metrics, deep institutional activity. It's complex.
Okay, let's unpack that true value idea right away, because it sounds like it's kind of the foundation here.
It really is.
Usually valuation takes time, right? Days, weeks, sometimes. But this AI, it's processing huge amounts of data in what, real time?
It's essentially, yeah. Calculating what the stock should be worth according to its models right now.
So when we say, like, a stock is 4% overvalue,
Right.
the AI is basically saying, hold on, this thing is trading 4% higher than where my models think it should be based on everything I'm seeing.
Exactly. And that connects directly to the buyer-seller direction metrics we track.
Yeah.
Which then feed into these trend strength indicators, like H-trend.
H-trend, high momentum trend.
High momentum trend, yeah. It's not just, what's the last trade green. It's looking at the depth of the bids and offers over the last hour, over the day. Is the buying pressure relentless? Is it price insensitive? That's H-trend.
Or is it passive? Or are sellers kind of taking control, exhausting the momentum?
Precisely. We're getting a snapshot of the deepest market intention right here at midday.
Excellent. Okay, scope defined. High volume, deep AI valuation, trend power. Let's jump right into the raw energy. Where's the action today?
Okay, so first we look at just the raw volume numbers. Where's the money concentrated?
Tells us where the focus is.
Right. But, raw volume is only like half the picture.
Yeah.
The really interesting metric here is the daily volume ratio.
Okay, what's that telling us?
It tells us how much of yesterday's total volume has already traded by 1 p.m. Central. Gives you the velocity, the degree of unusual engagement, really.
Right. Is today actually busy for this stock, or is it just always busy?
Exactly. And leading the pack today, TSLA, the leveraged ETF for Tesla.
Trading at $21.80. Volume is huge, 131.5 million shares already.
Massive raw volume. But here's the kicker, the eye-opener. Its current volume is 103% of the entire previous day's volume.
103%. Before the afternoon session even starts.
Yeah. What does that tell you when something, especially a leveraged product, blows past yesterday's total volume by lunchtime?
It feels like urgency. Something's fundamentally different today for that stock.
It's a definitive break from the norm. That 103% ratio, especially on something like TSLA, tells you that big money, retail money, everyone has decided today is qualitatively different.
Okay.
There's a shared conviction. This isn't just high volume. It's intense, highly unusual interest. Probably a catalyst, maybe a technical break that's got the momentum crowd piling in hard.
And the AI data seems to back that urgency up, right, with the valuation and trend?
Absolutely. It's already flagged as overvalue, 4% on the daily time frame. But look at the hourly 14% overvalue.
So it's getting more expensive as the day goes on relative to the model.
It is, and the momentum confirms why. Both daily and hourly buyer-seller direction are buyer up.
Okay, so buyers dominating all day and buyers dominating the last hour specifically.
Relentless buying pressure, which gives it the highest power trend classification, H-trend.
H-trend again.
They started early, they're chasing price higher, not much hesitation. TSLA is like the textbook definition of a high-velocity momentum play today.
All right, now let's shift to the big industrial names. INTC, Intel, and Ford. Massive raw volume here, too. 121.8 million for Intel, 106.5 million for Ford. Huge numbers.
Huge absolute numbers, yeah. But the relative engagement, that daily volume ratio, tells a very different story compared to TSLA.
Much slower pace.
You hit the nail on the head. Intel's only at 49% of its previous day's volume so far.
Okay.
And Ford, even slower, just 35% of yesterday's total volume.
Wow, only a third.
So yeah, lots of shares are changing hands, but if you're only trading half or a third of your typical daily volume by 1 p.m., the pace just isn't exceptional. It's high volume, but relatively sluggish for these giants.
But the valuation on these slower movers, that's where it gets weird. Intel started the day 2% undervalue pre-market. Now it's 7% overvalue daily. That's a decent swing.
It is. Shows buying interest picked up through the morning.
But then look at Ford,
Yeah.
a massive 43% overvalue based on the daily time frame.
43%, yeah, on Ford, with only 35% relative volume pace.
What does that suggest? 43% overvalue on a company like Ford without that TSLA-like velocity.
It's likely one of two things, maybe both. Either the AI's true value model is adjusting slowly. Maybe there was recent news that caused a step change in expectation and the model is catching up.
Okay.
Or it's driven by high conviction buying, but maybe not super liquid, enough to push the price way beyond that historical equilibrium without needing that crazy daily volume ratio we saw in TSLL.
So fewer traders, but maybe very determined ones pushing it up.
Could be. That 43% premium definitely needs a closer look. It's a big number for a company like Ford.
Definitely. We also have to touch on NVDA, Nvidia, trading around $191, just over $100 million in volume. Volume ratio is pretty strong, though, 76% of yesterday's volume.
Right, 76% is robust. Not explosive like TSLL, but solid participation. Also noted a gap up.
Yeah, started strong, but the valuation on Nvidia.
Whoa.
Yeah.
This is the real headline for NVDA today. The AI model flags it as 90% overvalued based on the daily time frame.
90%. Okay, let's contrast that again. TSLL, the rocket ship, is 4% overvalued daily. NVDA, the tech cornerstone, is 90% overvalued daily.
Exactly. Why is the AI seeing almost double the price relative to its true value model, especially when it's not even leading the absolute volume charge today? What's going on there?
That's the big question the AI forces us to ask, right? The daily true value model, it relies more on, history, fundamentals, stability over time.
It does. It's less sensitive to immediate hype.
So when NVDA hits 90% overvalue on that daily metric, the model is essentially yelling that the current price is almost completely detached from its historical risk profile, its financial flow dynamics.
Right. It implies a huge chunk of today's price is just pure speculation. Aggressive future growth expectation priced in.
Exactly. Stuff the AI hasn't maybe fully integrated into its historical model yet, or maybe it just views it as unsustainable froth. And that gap up just reinforces the early bullish conviction that pushed it there.
It suggests the market's confidence in Nvidia's future is just extraordinarily high right now. So high, they're willing to pay this massive premium over what the AI considers fair value based on past behavior. It's a measure of extreme speculative premium baked into the price at midday.
Okay, so we've got the heat map, volume, extreme valuations. But now we need to, ground ourselves a bit, look the bigger technical picture.
Right. All this volatility can be blinding. The 200 moving average of the 200-day and the 200-hour give us that longer-term context. They're vital.
What are they telling us about the foundation for these high-volume movers?
What's really striking is how overwhelmingly bullish the technical foundation is across this top 40 list. A very high concentration of these stocks are marked as both above 200 days moving average and above 200 hours moving average.
Okay, so the money flowing today, the high volume, it's mostly going into stocks that are already in established technical uptrends, both long-term and medium-term.
Exactly. We see this bullish alignment in names like TSLA, INTC, NVDA, SOFI, QQQ, the list goes on.
So what's the implication there for you, the learner? If you see high volume confirming a stock is above these major MAs.
It suggests confidence in the sustained trend.
Yeah.
Trading above the 200-day MA, that's a classic sign of strength, attracts trend followers.
Right.
So for these stocks, the foundation looks solid. The current buying is reinforcing that long-term technical uptrend. It kind of gives more credibility to the momentum, even if the valuation, like we saw with NVDA, looks stretched.
Okay, but markets aren't monolithic. Where's the deviation? Where is high volume flowing into technically weak stocks?
We've got two really clear examples of the opposite setup, SCOCO-Q and HBN.
SCOCO-Q is the Ultra Pro Short QQQ ETF. HBN is Huntington Bank shares.
Right, and both are explicitly marked as below 200 days moving average and below 200 hours moving average. They are technically weak on both timeframes.
TIPKQ kind of makes sense, right? It's an inverse ETF. If the market's generally bullish technically, like QQQ being above its MAs, then the short ETF should be below its MAs. The volume there reflects that battle against the trend.
It's exactly. But HBN, the bank stock, that's different. It's trading almost 80 million shares midday.
Pretty high volume.
Yeah, 79.8 million.
Yeah.
Yet it's deep below both its 200-day and 200-hour MAs. That points to significant trading action happening around a confirmed technical downtrend.
So if you're trading HBN today,
You're likely either shorting aggressively, maybe you're a long-term holder averaging down, hoping it finds a bottom, or you're trying to play a counter-trend bounce. All pretty high-risk plays because the main technical flow is against you. The high volume just tells us that this technical weakness is attracting a lot of attention, a lot of debate.
Okay, let's shift from the long-term MAs to the immediate signals, the gap analysis. What happened overnight or pre-market that the AI flagged as a major price dislocation?
Right, the gaps tell us about that opening momentum, the prominent gap ups. They're clustered where you might expect. High beta tech, leveraged ETFs, NVDA, SOXL, RNA, TQQQ itself.
They all started significantly higher than yesterday's close. Huge pre-market demand.
Yeah. But the real standout here, I think, is LUMN, Lumen Technologies. It had a massive gap up. And crucially, the AI had flagged it with a 10% overvalue based on its pre-market value calculation.
Whoa. So the AI basically saw that opening surge coming based on the flows it analyzed even before 9:30 a.m. Eastern.
It seems like it. That's a pretty powerful validation of that pre-market true value metric. It shows where the algorithm saw an imbalance building before the bell even rang.
Fascinating. Now contrast that with the gap downs. Stocks opening under immediate pressure, even though they're on the high volume list today.
Right. SQQQ, HBN, again, makes sense given their technical weakness.
Yeah.
Also GDX, the gold miners ETF, UU, Energy Fuels, and NTLA, Intellia Therapeutics.
So all these started the day in the red, significantly below yesterday's close.
Yeah, they're dealing with established headwinds right from the open. The midday trading in these names is basically fighting against that initial wave of selling pressure.
Okay, one more technical point, the subtle divergences in the MAs. Stocks that are still strong long-term above the 200-day, but have recently slipped below the 200-hour.
Yeah, this is a really crucial zone for assessing recent weakness or potential turning points. We see this pattern in Open, NTLA, Riven, RKT, and QUBT.
So long-term trends still technically up, but the last, month or so of trading has seen them dip below that key 200-hour support.
Exactly, maybe the last 20, 30 trading sessions. For traders, this signals a corrective phase, a temporary loss of momentum within a longer uptrend.
So the volume we're seeing in these names midday, it's probably a tug of war, right? Between the long-term bulls looking at the 200-day and the short-term bears pointing to the break of the 200-hour.
That's a great way to put it. It's a battleground. And the fact that Open is in this group above 200-day, below 200-hour, that sets up a really dramatic context for its valuation numbers, which we should probably get into now.
Yeah, let's do it. If the technicals are the foundation, this section on true value extremes, this is where the AI data really starts shouting, like you said.
This is where we look for the biggest distortions. The stocks trading furthest from what the AI models calculate as equilibrium price.
And we absolutely have to start with the single most, jaw-dropping data point on the entire top 40 list today. Open Door Technologies, that daily overvalue figure. Just say the number.
The number is 11,148% overvalue, based on the daily time frame.
1,148%. Okay. Yeah. If I saw that number pop up on my screen, I think my data feed was broken. Or I misplaced a decimal point.
Right. It's astronomical.
How does an AI even generate a number like that? Does the true value model just break at that level? Or is this like the pure definition of a speculative frenzy?
That's a really important question. The model doesn't necessarily fail in the sense of crashing, but its parameters, which are based on, historical volatility, institutional flow patterns, fundamentals to some extent, they just cannot justify the current price action. Not even close.
So it's saying the price is completely untethered from history.
Pretty much. A figure like 11,148% overvalue implies that the market participants trading Open right now have completely decoupled it from any reasonable historical or fundamental reference point. It's not about earnings. It's not about assets anymore.
It's about momentum. Short squeeze potential, hype.
Exactly. Momentum, short interest, pure speculative expectation. It's driving what looks like a massive price bubble relative to the AI's standard framework for valuation.
Okay, that screams extreme high risk. But wait, the plot thickens, right? Because when we look at the hourly valuation for Open...
Right. Despite that insane 11,148% daily overvalue, Open is currently flagged by the AI as 5% undervalue on the 1-hour time frame.
When does that happen? 1,000% overvalued daily, but slightly undervalued hourly?
That massive swing is a perfect illustration of a rapid midday correction, a huge whipsaw. So the big picture, the daily view, astronomically overvalued. But in just the last hour, maybe aggressive selling, maybe profit taking, has pushed the price down so fast and so far.
that relative to just the last 60 minutes of trading patterns, the AI now briefly sees it as being slightly cheap.
Exactly. It's a snapshot of extreme volatility. High volume, crazy daily overvaluation suggests some see a generational opportunity, others see a massive short target. The hourly dip just shows how quickly sentiment can shift in these hyper-speculative names.
Are there other stocks showing this kind of massive speculative premium, even if maybe not quite that extreme?
Yeah, we see other signals of heavy speculation, especially in some of these lower-priced tech or concept stocks. Joby Aviation, is flagged at 188% overvalued daily.
Okay, still huge.
RGTI, Rigetti Computing, is at 172% overvalued daily. And NBTS, Nvidia Semiconductor, is at 92% overvalued daily.
So similar pattern, high volume, extreme daily overvaluation.
Right. In all these cases, it tells us the market is willing to pay a massive price today for a future largely unproven potential. They're massively discounting the fundamental risks involved, according to the AI's models.
Okay, let's flip the coin. Let's look at the extreme hourly undervalue signals. Where does the AI think a stock has dropped too far, too fast, just within the last hour or so? Potential immediate bargains, maybe?
The prime candidate here is NTLA, Intellia Therapeutics. It's showing an extreme 68% undervalue on the 1-hour time frame, 68%.
Wow. And what's its daily true value? Is it also undervalued?
No, that's the key contrast. Its daily true value is actually 26% overvalued.
Okay, hold on. So NTLA was considered fundamentally overpriced based on the daily model, 26% overvalue. But then something happened in the last few hours that caused a massive sudden drop, making it look like a huge bargain just on the hourly chart, 68% undervalue.
Exactly. That suggests a major instantaneous price-moving event. Could be bad news hitting the wires, maybe a negative regulatory filing update, could be a large institution suddenly liquidating a position.
Something caused a very sharp, very recent sell-off.
Right. And the sheer size of that 68% hourly undervalue figure suggests that the price fell so fast, the AI models haven't even adjusted the hourly true value calculation downwards yet to match the new reality.
That sounds like a classic falling knife scenario.
It really does. It might look like a pricing opportunity on the hourly chart, but it's incredibly risky until you understand why it dropped so hard so fast.
Definitely need caution there. Do we see any other significant undervaluation, maybe something more sustained?
Yeah, QUBT, Quantum Computing Inc. Looks interesting in that regard. It's showing 35% undervalue daily and 39% undervalue hourly.
Okay, so that's different. Consistent undervaluation across both the daily and hourly models.
Right. That consistency suggests maybe a deeper, perhaps more fundamentally justified pricing dislocation, something that's been in place for a bit longer, not just a sudden hourly drop. And it's attracting high volume, possibly as investors are looking at it thinking, okay, maybe this is the bottom, maybe it's genuinely cheap here.
These valuation metrics, daily and hourly true value, they really are like the market's biggest behavioral flags, aren't they?
They absolutely are. They tell us exactly where the current price action is diverging most dramatically from the AI's mild norms. It's powerful stuff.
Okay, this is fascinating. Let's pause here for just a second. Before we connect these valuation extremes to the actual buyer and seller power dynamics that are driving these moves, just want to say, if you are finding these AI-powered insights valuable, if this deep dive is helping your perspective on the market, make sure to hit that follow button and turn on notifications so you're the first to get our market analysis update every single day.
All right, so we know the valuation landscape. We know where the extremes are. Now let's figure out who's winning the battles midday.
By looking at the buyer-seller direction, right? Comparing the daily momentum versus the hourly momentum.
Exactly. That comparison is key because it reveals the shift points.
Yeah.
Where is the power changing hands?
So where do we see clean momentum, consistent power?
The cleanest plays, the ones with no ambiguity, are TSLL and its underlying stock, TSLA. Both are showing buyer up on both the daily and hourly frames.
Okay, reinforcing that H-trend classification we talked about earlier.
Totally. Buyers are in complete, relentless control. For you, the learner, H-trend translates pretty simply. Buyers are chasing the stock higher all day and in the last hour, too. No signs of letting up yet.
And we see that same clean momentum in LUMN as well.
We do. Consistent buyer up on both time frames there, too. Which makes sense, right? It supports that big gap up it had, and it's maintaining those high daily and hourly overvalue figures we saw, 32% daily, 28% hourly. But buying isn't just supporting the price. It's aggressively defending that premium the AI flagged.
Okay, but the really interesting stuff strategically is often in the divergences, right? Where
Yeah.
the power is actively shifting midday.
Absolutely. That tells you about potential trend exhaustion, or maybe a reversal attempt happening right now against the established flow. That's where the tactical opportunities often lie.
So let's break down the first key divergence. Daily seller, hourly buyer. These are stocks that were weak for most of the day, but buyers have suddenly rushed in during the last hour.
Right. And this list is really interesting. QQQ, Kitty T, Kitty P, Keurig, Dr. Pepper, QQQ itself, Rivian, and ETHA, Eternity Networks.
Okay, quite a mix there. ETFs, a telco, a beverage company, EVs.
Yeah, but the pattern is the same. The overall daily trend was weak, seller-dominated. But just in the last 60 minutes, the AI sees buyers stepping in very heavily.
What does that typically signal, especially for the ETFs like SQQQ and QQQ?
It points to extreme intraday volatility and trend uncertainty. You've got traders actively trying to force a short-term reversal against the flow established earlier in the day. They're aggressively buying the dip that formed during the morning.
That hourly reversal on SQQQ, the short ETF, against a QQQ that's also seeing hourly buying, that sounds like a real battleground.
It's classic high-stakes counterflow. If the broader market, QQQ, gets bought up strongly in the last hour, hourly buyer, the short ETF, say QQ, should theoretically sell off. But if shorts are covering aggressively, or if counter-trend traders are piling in thinking the market bounce is fake, you can see CQQ flip to buyer up hourly, even as QQQ strengthens. The AI is capturing that exact, messy, counterintuitive flow.
Okay, fascinating. Now, the other divergence, maybe the erosion signal, daily buyer, hourly seller, stocks that started strong but are now hitting a wall of selling pressure in the last hour.
Right. This is where momentum might be fading.
Yeah.
Our key examples here are INTC, Intel, and CIFR, Cipher Mining.
Intel again, huge volume stock. Started with buyer momentum, pushed up to 7% overvalued daily, but now the hourly chart shows sellers are in control.
Exactly. This is a critical signal for Intel midday. It suggests that morning enthusiasm is potentially dissipating. Sellers have stepped in, could be profit takers, could be bearish algorithms seeing weakness. They've taken control of the flow in the last hour.
So for the afternoon session for Intel,
It suggests a corrective phase, maybe even a bearish turn, is now underway, unless the buyers can step back in and recapture that hourly momentum. It's a clear warning sign on a high-volume name.
okay. Now we also need to talk about those volume ratio signals again, the ones that really jump out, suggesting activity that's way beyond normal, even if the raw volume isn't #1.
Yeah, these tell you about relative explosion and interest. We have two really profound outliers here today. First, QC on M, Qualcomm. It's trading at 1,110% of its previous day's volume already.
1,100%. So 11 times its normal daily volume has traded just by 1 p.m.
11 times. That's huge. Significant news or institutional repositioning almost certainly driving that.
But that's not even the biggest outlier, is it?
No. The ultimate outlier today is RNA, Avidity Biosciences. It's trading at, get this, 4,282% of its previous day's volume so far.
4,282%. Okay, that's 42 times its normal daily volume. And yet, its raw volume is only about 55 million shares, kind of mid-pack on our top 40 list.
Exactly. That tells you RNA must normally trade extremely thinly for it to suddenly see 42 times its usual volume. Something absolutely seismic happened today related to that stock.
What kind of event drives that? It can't just be retail hype, can it?
Almost certainly not. A ratio like that is a flashing red light for major institutional news or activity. A 42x volume surge usually points to something like a massive institutional block trade, changing hands, maybe significant clinical trial results were released, a major partnership announced, something fundamental and large.
So the AI seeing flow jump by over 4,000%. It's basically saying the normal liquidity structure for RNA just got completely overwhelmed today by massive new interest.
Overwhelmed, yeah. Likely interest coming from sophisticated players who normally wouldn't touch such a thinly traded stock, but were drawn in by whatever this major event was.
The takeaway seems clear then. While we track the raw volume leaders like TSLA, the real signal for potentially explosive, unusual movement is hidden in that volume ratio data, QCOM and especially RNA. That ratio tells a story of institutional urgency or major events.
All right, let's wrap up this analysis by looking at the risk profile and any specific markers of abnormal concentrated trading pressure. First up, implied volatility rank or IV rank.
Okay, this tells us how much the options market is expecting the stock to swing in the future, right? A measure of expected volatility.
Exactly. It's a fantastic cross-check on those extreme valuations we were just talking about. Are the options traders also seeing high risk?
And where are they seeing it today? Which stocks have the highest IV rank among our high volume movers?
We see three clear standouts with extremely high IV rank, signaling very high expected future price swings and therefore very high risk setups right now. CIFR, cipher mining, is at 166% upward.
Oh, 166%. Wow.
NTLA,
Yeah.
Intelia, is at 160% upward. And Open Door is at 158% upward.
Wait a second. Open and NTLA, those were the stocks with the absolutely wild valuation distortions we just discussed. Open with the 11,148% daily overvalue, NTLA with the 68% hourly undervalue.
Precisely. That correlation is crucial. The fact that the options market is also pricing in massive future volatility, IV rank well over 150% for these same stocks, confirms it. It tells us these aren't just weird AI model readings. The entire market recognizes these as extremely high risk, high reward, highly distorted situations right now.
So options traders are basically betting on continued violent price moves for Open and NTLA. Makes sense.
It does. They're expecting the chaos to continue.
But let's go back to RNA. The stock with the insane 4,282% volume ratio. What's its 5E rank? Is it also through the roof?
That's what's fascinating. No, it's not. Despite that phenomenal volume surge, RNA shows a relatively low IV rank, only 14% now.
14% downward. That seems like a massive disconnect. 42 times normal volume, but subdued volatility expectation. How does that compute?
Well, that disconnect actually supports the theory we had earlier, that RNA's volume spike was likely a one-time, non-sustained event.
Like a big institutional block trade.
Exactly. Maybe a structured transaction, a large funding round closing, a big sale or purchase between funds, something that moves huge volume, but isn't necessarily expected to lead to ongoing, unpredictable price swings day after day.
So the options market seems to view it as, okay, big flow happened, but it's done now. We don't expect continued chaos like we do for Open or NTLA.
That seems to be the read, yeah. The low IV rank suggests the options market isn't pricing in a new regime of sustained volatility for RNA despite today's volume explosion.
Very interesting distinction. Okay, finally, let's look at the specific activity flags the AI monitors, unusual activity count, and squeeze data.
Right. The unusual activity metric, it tracks concentrated order flow that deviates from typical algorithmic patterns. It can suggest large, maybe coordinated institutional orders hitting the market.
And who's showing up there today?
TSLA and Palantir, both report an unusual activity count of 13.
13 distinct instances flagged by the AI midday.
Yeah. When you see high volume combined with a cluster like that, 13 unusual activities, it suggests that significant atypical orders are helping drive the price action, points towards concentrated, possibly intentional, directional pressure from larger players.
Okay, and what about the squeeze data, the squeeze indicator? What does that mean for the learner in practical terms? Is a squeeze about to happen?
The squeeze indicator suggests a buildup of pressure. Usually it's related to Bollinger Bands being inside Keltner channels, indicating low volatility before a potential short move. It often implies directional pressures building, maybe short interest getting trapped, or hedge positions becoming stressed.
So it's like potential energy building up.
Good analogy.
Yeah.
And we see explicit daily squeeze indicators, meaning this has been building for a while on NVDA with a count of 7, and SOFA-FI, also count of 7.
A count of 7, is that significant?
Yeah, a count of 7 is pretty substantial. It means the squeeze condition is well established on the daily chart. Now, if this pressure resolves, meaning the stock starts moving sharply out of that low volatility range, usually in the direction of the prevailing trend, it can lead to a very rapid move. Shorts covering, momentum traders piling in, it could accelerate things quickly.
So potential accelerant for NVDA and SOFA this afternoon if they break out.
Potentially, yes. And we also see some shorter-term squeezes, 1-hour squeeze flags, on RGTI, count of 2, and QUBT, count of 2.
So pressure building just in the midday session for those two.
Right. Indicating very recent short-term focused pressure. All these indicators together, IV rank, unusual activity, squeezes, they paint a picture that the market isn't just moving randomly. It's moving under specific, detectable structural stresses and pressures that the AI is picking up. Hashtag cat outro.
Okay, that was definitely a deep dive. A really comprehensive look at the top 40 highest volume flows powered by these AI metrics right here at midday.
Yeah, a lot to process. But if we were to synthesize, maybe pull out the 3 biggest themes that really emerged from the AI models this midday, October 27th, what would they be?
Okay, theme 1 for me would be the uneven leadership. Yes, the high-volume leaders like TSLA and Intel are technically strong above their 200-day MAs, but the participation, the relative volume, is wildly uneven.
Right. You've got TSLA running at 103% relative volume, just relentless, contrasted sharply with the comparatively sluggish pace of giants like Ford, 35%, and Intel 49%, despite their high raw volume numbers. The energy isn't evenly distributed.
Exactly. Theme 2 has to be those extreme valuation metrics. They're just impossible to ignore. Opens 11,148% daily overvalue.
Paired with its 158% IV rank.
Right. It confirms massive speculative interest is just crammed into certain stocks, often these lower priced or concept names, and it leads to these incredibly violent whipsaw corrections like we saw with open flipping to undervalued on the hourly chart after that huge daily premium.
Agreed. Extreme valuation is a major theme today.
Mm.
And the third theme, I think it's that significant trend divergence we saw happening midday.
Yeah, the active power shifts, where daily buyer momentum is clearly being challenged or even reversed by what's happening hour to hour.
Right. We saw it in the erosion of Intel's buyer power on the hourly chart. We saw it in that aggressive counter-trend hourly buying in ETFs like QQQ and SQQQ fighting the earlier daily trend.
Yeah.
That divergence is a really key strategic signal for the afternoon session.
Absolutely. Okay, so those are some big takeaways. And look, if you found these AI-powered insights valuable, if this helped you make sense of the midday action, again, please make sure to hit that follow button and definitely turn on notifications. That way, you'll be the first to get our market analysis update every single day.
We'll be back drilling down into this data daily.
Now, as we wrap up this midday deep dive, I want to leave you, the listener, with one final, maybe provocative question to think about. It comes straight from some of the most extreme data we looked at. Given that really high-profile established stocks like NVDA and Ford are showing such substantial daily overvalue figures, I mean, 90% for NVDA, 43% for Ford, even though their technical setups look pretty bullish, how much of this high-volume midday action that's keeping them elevated is actually driven by true fundamental confidence, by calculated long-term risk assessment, versus just high-velocity momentum trading, herd behavior, algo chasing, the kind of flow that might just burn itself out completely before the closing bell rings this afternoon. That massive AI-flagged valuation premium, especially on NVDA, it suggests an enormous amount of future hope is already priced in right now. And that premium becomes a really big target if results or sentiment falter even just a little bit. How much is conviction? How much is just flow? Something to think about.